Good morning, ladies and gentlemen. Welcome to today's webinar, Real-Time Daily Trading Ideas. 5 days, 5 traders. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Many of you will probably have seen it a couple of hundred times, but it is important, so please be aware of it, the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. If you are unexperienced with our products or trading in general, please do get used to the trading environment by using a demo account. If you have any questions regarding that, just give us a call and we will be there to answer all of your questions. All right, this is the schedule for the week. Today, we will have a small exception. Instead of Jay, Jens is going to be speaking to us. All right. And many of you probably know the reasoning as to why they're trading with us, but just as a quick reminder, we do have best index and Forex offerings with spreads of just 0.6 and 0.8 pips respectively. Right. I'm passing over the screen to Mr. Jens Klatt. Give me a second. Good morning. Jens?
Yes. Hello and good morning. Everyone can hear me?
Yeah, we can hear you.
Yeah, that's beautiful. Yes, thanks for having me here today. Yeah, this is the face to the voice you're currently listening to. But I want to switch over right here to the chart. In fact, it's somehow a very, very interesting a week of trading because the thing is, it's not only that we have a packed agenda from a news perspective. So the economic calendar has lots of many spectacular trading or news events for us. So tomorrow, for example, we start with GDP numbers from the Eurozone. After last week, for example, some very strong numbers were published on Friday for the US. Interestingly enough, the US dollar couldn't really profit from it. One of the potential reasons for that is that inflation numbers came in below expectations, so PCE numbers came in below expectations, and this could mean that the Fed has to be more dovish in her monetary policy here in the months to come. On Wednesday in Germany, for example, we have a bank holiday. It's the Labor Day. Same is true. So this is also affecting, by the way, trading hours, and therefore I highly recommend checking the website from Admiral Markets for the changed trading hours. This is especially true for European markets. US markets are open, and not only are US markets are open, but this is a day when we have ADP employment data, we have ISM manufacturing data, we have a Fed rate decision in the evening. And all this combined is capable of resulting in some higher volatility. And not only that, but we have in Japan the so-called Golden Week, which means that equity and bond markets in Japan are closed while it's possible to trade JPY in the FX markets. Why is this worth mentioning? It has to do with the fact that in the beginning of the year, at the beginning it was the 2nd, 3rd of January, was the first day of trading, there was a flash crash in the JPY. So let me just, this is EURJPY, by the way. So we'll have a deeper look into it here in a few moments. But now let me just switch over to just show you what happened. What happened then? There was a flash crash with JPY coming under pressure on a broad front and all crosses. In fact, probably I shouldn't have zoomed out that much and then click on H4. That wasn't such a great idea, to be honest. I just hope that it will update soon. But let's continue speaking. So the thing is that this could or will most likely result in very, very thin market conditions. So there we have it. This is the flash crash day. That was the 2nd of January for the rollover from the 2nd into the 3rd of January, in fact. So many market participants are currently saying that there's a higher risk of such a move happening once again. And all this has to be kept in mind when trading this week. So all in all here with the DAX, it's probably very thin, to be honest. So if you look at the price action at the beginning of the day, you probably have seen a squeeze on the upside, short squeeze on the downside, and now market is stabilizing a little. But nevertheless, you should be aware of all these economic events coming up, and then should also be aware of the thinning out liquidity due to the Golden Week in Japan, plus this Labor Day in Germany especially. So now let's come to the markets here, and let's have a look at the EURJPY first. Our trade for the day, we call it. It's a purely statistical trading approach, which is not taking into account lines as support or resistance zones or something like that. This is something you could bring up then with a certain level of experience, and we call it a discretionary intervene into trades to try to optimize the outcome, so the expected value, optimize the equity curve and smoothen it. But all in all, we want to look only at the setup itself here. And therefore, we define a range between 2 to 9 a.m. London. So these are the two blue lines, the horizontal ones you can see here. And we have a high, we have a low then. And then what we do is we use this exponential moving average here in purple. It's the EMA 11 on a 1 hour time frame. And with this EMA, we identify if we go long or if we go short, which means we only trade breakouts out of this range we defined in the step before on the upside if we trade with an hourly close above the EMA 11, while we only trade short trades once we trade below and break out below the EMA 11 and break out on the downside of this identified range. And as you can already see here, we already have a trade open, resulting out of the fact that the range was already defined 1 hour ago and shortly after we broke on the upside. So far, no further momentum was taken here on the upside. I have to be, by the way, honest, it's a purely statistic one setup, but all in all, I follow the rules, everything's fine. Nevertheless, I don't really feel I don't feel comfortable being long the euro. I want to dig deeper into this in a few minutes here. But nevertheless, these are the rules we play by, and so we are long. I've written down here the parameters of this trade. So you can see the range, the high and the low. So this is the low, 124.46, 124.80. This is the range. Then we say entry long with the buy stop. We were triggered 124.8 here. Since we are trading above the EMA 11, then we place the stop below the range, which is 124.46, resulting in a risk of 34 pips. And this is probably most interesting here, and this is where the statistics come into play. We're working with a predefined risk-reward ratio of 1 to 1.7, which means we multiply our identified risk here of 34 pips with 1.7 and add those, in this case then 1.7 multiplied with 34 or 58 pips on the upside of the range. So we have 124.8 and we add 58 pips on top of that. So we get a target or our sell limit we have to place then at 125.38. And that's in fact the setup of the day. That's the trade of the day. And now we just hope that this drift especially continues again. Especially EURJPY is probably affected by these trading conditions I just mentioned, Golden Week in Japan. So JPY in general shouldn't be expected to be too volatile. And if it gets volatile, it's probably brutal volatility based on this risk of a potential flash crash. And then Eurozone with the Labor Day, especially on Wednesday, we probably can already spot some thinning out liquidity in the euro. So EURJPY is probably especially affected. But all in all, I think so far, everything runs smooth, and nevertheless, we should keep it in mind, nevertheless, not overestimate it on the other hand, in my opinion. Then currently in this drift higher, the most likely outcome is that we continue with this trend. So this is somehow the basic of the current potential outcome here, and why probably the long side is not such a bad idea in general. It has a positive expectancy, so everything's fine from this perspective. Nevertheless, you probably get also some kind of better feeling if you can explain, if it makes sense, the trade, if it really makes sense also from the current buys, in fact. And so, well, probably from this perspective, it's okay to be long. But when looking at the fundamental side, then you're clearly seeing that the euro and long engagements in the euro are probably not such a great idea. Therefore, we switch over here to the EURUSD, and what you can clearly spot is that we broke out last week already on the downside of this range, which we traded in for months, over half a year, in fact, between 112 on the downside and 115. In fact, it was 111.80 on the downside. That was a low, which was made here on the ECB rate decision in March. And so the market traded sideways for quite a while, and then we broke out on the downside. That was mainly initiated by a very bad data set from Germany, purchasing manager indices for the manufacturing side here, and that was already, or is around 1.5 weeks ago. But this is where it all started, and then last week on Wednesday we finally broke out of this range, and it really seems as if this break lower is really the real deal. And that said, by the way, it looked like that. It still looks like it. Nevertheless, there's a grain of salt to it. When looking at the reaction to the GDP data from the US last week on Friday. So I've prepared already something. Here, this is a website, Trading Economics, United States GDP growth rate. And you can see numbers came in at 3.2, while they were expected, in fact, at 2%. That was the consensus here. And there you can see U.S. economy grew by an annualized 3.2% in the first quarter of 2019, easily beating market expectations of 2% and following a 2.2% expansion in the previous 3-month period. Growth was mainly supported by personal consumption expenditures, so PCE here, private inventory investment, exports, and local government spending. So especially local government spending, this is something which is already, there are questions whether this is sustainable or not. Same is true for exports right now when looking at the overall trade war still brewing and still not having a deal in regards to such a to trading when it comes to the US and China especially. So the question is a little whether this is really sustainable growth or not. That was one potential explanation. But all in all, I have to say, I still, especially when looking and compare the US here to the Eurozone, I still doubt whether the move on the upside, it wasn't in fact a really big one, but the pullback here in the EURUSD is really not only a short push higher, while then we should expect over the next days, probably over the next weeks, EURUSD keeping on taking momentum on the downside and pushing lower. After especially many data sets disappointed over the last weeks and also months, especially from Germany, and there's clear signs of a potential recession forming at the horizon. Yeah, and so today, business confidence, this is not such a big deal, let's say, but personal spending in the afternoon, then we start to take on momentum today. So these are potential first events which could trigger another push lower in EURUSD, and where 111.80, 111.90 in EURUSD is probably a potential short trigger, from which we then take in the days to come momentum on the downside, especially if data sets from the US, when it comes to ADP, for example, on Wednesday, when it comes to ISM manufacturing on Wednesday, when it comes to the Fed on Wednesday, when it comes to the non-farm payrolls on Friday, then if these data sets point to somehow stronger growth in the US, respectively to, let's call it more neutral stance in the rhetoric of the Fed. And why is this of importance? I think this is of high importance due to the Fed Watch tool here, where we get an idea of what market participants are currently expecting in terms of rates from the Fed. And when looking at the target rate probabilities by or for the 11th of December here, 2019, this is the last Fed meeting in the year, those columns show you with or which rate level market participants expect then to be in play. And this one here, 36.5, is the current rate level. So which means currently we only see lower levels here. So market participants are obviously expecting by more than 60%, in fact, here, the Fed to cut rates by the end of the year, at least once. So the highest probability can be found here, 41% with one rate cut. But this is the interesting thing, data, as it came out now, especially GDP data, even if it's sustainable or not, but in my personal opinion, but there's also some rumors or at least some voices around market participants which clearly state, well, we don't really see a reason for the Fed to cut rates into such a current economic environment. It just doesn't make sense, or it seems as if it's not necessary. Same is true when looking here, for example, at the developments in U.S. equities. Have a look at the S&P. So we made a new all-time high last Friday. Sustainable growth. So what reason can you bring up to cut rates in such an environment? I mean, we don't have any reason to that. And if now data comes in better than expected good data coming into this kind of market bias, which is currently seeing with a higher likelihood a rate cut than a neutral policy in the months to come, chances are very good that good data could trigger some serious bullish momentum in the US dollar, which would then surely push the EURUSD lower and towards 111. By the way, in this regard, also when looking at the US dollar, it's also definitely makes sense, in my opinion, to have a look at gold. And here in this regard, have a look at this push higher, which took place on Friday too, into this US dollar weakness. Gold saw a retest of this neckline here in this head shoulder formation, which is a potential short trigger. So last week in the traders block section, let's just click back here. That was already on Wednesday. If you go on admiralmarkets.com and then there on analytics traders block, you click on it, just wait a second, and then there will an article pop up which makes here how to trade chart patterns gold head shoulder formation, which is currently starting to play out. Not sure whether it will play out. It depends on whether we can hold above 1,260 USD. But here's a little theory behind this, and then there's an explanation of how to apply this head shoulder pattern in theory into a practical market environment. And there you can see it here, the potential trading setup for gold. There is what we made a topic already last week on Tuesday, Wednesday, I think, that where we said such a pullback towards this level, 1,290 USD, is a potential short trigger with a stop being placed at 1,310 and then going lower from there with a target somewhere in the region of 1,230, probably even a little lower, 1,220 USD. So it's not only a technical one, but on top of that, also the fundamental side is currently clearly on side of the gold bears, in my opinion. And yeah, so with this in mind, I think it's definitely worth noting that the days to come are of high interest for us, even though in Germany especially we have the Labor Day. And probably finally, that makes also sense, let's have a look here at the DAX, which is currently pushing to new daily lows after a short squeeze on the upside. Not really sure whether this is a sustainable move. I want to be honest, I don't really like to, by the way, let me just do the following here. Let me just write DAX30 CFD into the chart so that everyone knows what time frame we're looking at here. I don't really like to trade the push lower here in the DAX, something I definitely want to emphasize. And the reason for that is when looking at the intraday, on the hourly chart, what we can clearly spot is that there's a sequence of higher highs and higher lows, and as long as we trade above 12,250, probably some might also say, well, this is not even a closing price at new highs. So probably the last relative low can really be found here at 12,180, 12,200 points. So as long as we trade above this region here, the overall mode can be clearly found on the long side, or the advantage can be found on the long side. And I wouldn't really like to short the DAX into this environment. So what we currently see, probably squeeze in the morning higher, but also the current move lower here, that's probably due to an already thinning out market environment. And I think the sustainability of these moves is not really given. Well, that said, in fact, I definitely favor long engagements. Not sure if after now the DAX paints such a critical, let's call it critical picture, I'd really want to go long, but I definitely favor long engagements intraday over short engagements due to Labor Day on Wednesday here. And also the outlook for a weaker euro, which is usually better or positive for the DAX at all. Nevertheless, also here you can see this purple line. This is my intraday trend filter, we can call it, which means it's the EMA 50 on a 5-minute time frame. As long as we trade below that, no long engagements are taken now, at least. But if we can make it back above the EMA 50 here again, then I definitely look for long engagements again on an intraday time frame. But right now, the main focus is in fact really on FX, on EURUSD especially, and also on our trading setup here, which we formulated for EURJPY. And yeah, just let's hope that it plays out and that we get at least the drift back above 125. By the way, also one thing I need to mention here probably you have wondered, okay, what happens if the stop, respectively the target, is not triggered? Then we take out the trade at 8:50 p.m. London. And wherever it trades. So if we trade within this range, we just take it out. If we trade somewhere here, and the trade shows a profit, even though it hasn't hit the target, we take it out, and then we just wait for the next day and re-enter the market according to these parameters here. Yeah, that's it from my end.
All right. Thank you very much, Jens. Thanks for the comprehensive analysis. Thank you guys for listening. I hope you enjoyed today's webinar. If you did enjoy it, you can review it on YouTube anytime. Thank you very much, guys. Have a good day and a good start into the week. Thank you very much. Bye-bye.